Welcome to Power Charting. I'm your host, Bruce Frazier. Today, Wyckoff stock selection. We have special guest, Johni Scan. John, welcome.
Great to be here, Professor Bruce. How are you?
Well, I'm okay. You know, people have noticed that I missed last week, and I have to say, after 2.5 years, the COVID finally caught up with me. And so I was suffering from a series of symptoms. Probably the most important was COVID brain, COVID fog. And I didn't want to subject our wonderful Wycoffian community to my COVID fog, which could be enforced this very minute because I can't tell. So anyway, so I'm just warning you in advance. That's partly the reason that you're here, is to keep me on the rails. So I just want you to know that that's your job.
We're going to ride herd on the COVID brain, Dad.
Anyway, so thank you so much for being here. And I know many of you have been through the COVID. It's no fun at all. And fortunately, I got through the worst part of it okay. It's the stuff that came after, you know, the brain dead part, you know, the zombie part, that is a little disturbing. But anyway, so, but I do want to point out that Johni Scan did a Your Daily 5 today, and it's out today, Thursday. And John, tell us about it.
Well, we did a very interesting little scan looking at a penetration of the lower Bollinger Band with a return into the bands, sorting by the rate of change on a 20-period SMA, which of course is the middle line of the Bollinger Band indicator. And we had some really fascinating results. We had some anomalies too, which we've got to take a closer look at. Anomalous results are a signal that you really need to look into what you're doing a little more closely.
The peanut gallery is going ooh and ah because I really like that Bollinger Band concept with the overbought, oversold characteristics, and then doing the scanning on it. So that's really exciting. I'm looking forward to plugging that one in and seeing your program.
Absolutely.
So,
well, it's
yeah,
out and about.
Fantastic. But that also brings us to scanning part 4. There's another scanning session coming up. Tell us about it, John.
Well, this is a scanning presentation that Professor Bruce and I have worked diligently on. We've set that for July of this year. The really big effort is to look less but see more, scanning efficiently. That's the key here. So this is our credentials, our bona fides, and of course, Professor Bruce, 6 hours of Professor Bruce over 3 sessions. Can you even imagine something better than that?
I can't imagine that. No. So
well, we'll be riding herd on that one too.
Well, I love the title, Look Less, See More, because that really is what scanning's about. And so, and a big part of the thrust of the effort of what John does is to create scans that really get us to the best stuff and gets us there quickly. And John, tell us a little bit about some of the things we're going to do here, like the scan session 3, some interesting stuff here.
Absolutely. We're going to plow some new ground in the way to think about scanning, not just a way to discover stocks and opportunity, but what if we use scanning and list management techniques that are available on stock charts to help us manage our portfolio, assess our risk, determine when our watch list candidates are really ready to go, and all of that's delivered to your desktop as a list every day through the alerting features available in stock charts. Imagine that. That's going to be, that's worth the show right there. That's worth the price of admission. But we have so many other skills and ways to think about how to use the scanning engine. Really going to be a great show.
More oohing and awing from the peanut gallery. That when we decided to do this for part 3, yeah, it's pretty exciting because the ability to be able to do scanning on your portfolio to be able to maximize performance, minimize the dogs and cats, and be able to make a most efficient portfolio where all your capital is working effectively is just, I think, a really great promise of the whole scanning concept. So this has been really fun to work on, and we're excited to show it to you. All right, so let's just pause for a second and get our screens ready to go here, and then I'll be right back. So let's just orient ourselves. It's been a few weeks. We talked about green shoots developing, but John, here's the NASDAQ 100. And hang on just a sec. Okay, so the gardeners are outside. Anyway, so here's the NASDAQ 100. And it shows us the big construct of this distributional formation. And the after the rally in March, we had a very important decline into the May low. And notice there, John, the downtrending channel and the oversold condition, and the throw under of the channel. So the one thing that I think may be at work here, and we'll look at some other charts to support that, is that we're coming into the middle of the year. And John, do you remember that chart of the decennial pattern of the second year of the decade?
That's the scary one, as I recall.
Yeah, I mean, it was down right into what, the middle of the year.
Yeah.
And then we made a really good low. Well, here we are, we're at the middle of the year, and we have a classic oversold condition. And with that oversold condition, let's go down here and look at this chart of the bullish percent of the NDX. And John, you and I have talked about this repeatedly about the green shoots that seem to develop in May. And so do you see the green shoots showing up here on this chart?
Oh yeah, look at that red line.
Right here.
Yep.
So new low in May, third week of May, higher low in the bullish percent. Doesn't matter whether we look at stocks above their 50-day moving average, or we look at the bullish percent or the AD line, whatever we look at, we saw higher lows, diverging conditions. And so I'm suspecting, because we are at the end of the quarter, that we're going to come into the end of June with some window dressing. And so in the window dressing that I believe that we might be seeing is related to these stocks that were the former big winners, which were the growth stocks, the ones, the ARK fund stocks and so on, which have been so mightily really just torn apart. And I believe that these institutional portfolio managers are going to just be selling these stocks to get them off their sheets in the mid-year, into the end of the June reporting period. And then once we get through that, I believe the market can have a more sustainable rally. And the key here is to look at the green shoots and see whether or not they continue to persist into the early part of July, into the end of the quarter, into the early part of July. So that's kind of the way I'm thinking about it, is that if we have a really good low here, we should have probably the May low as the internal low, and then the July low or late June low would be the test of the internal May low. And John, you had mentioned earlier the put call data. Let's just take a look at that. So you can see here, this is the 10-day moving average, the green line. And John, do you see this big bulge right here?
Absolutely.
So that's a huge amount of put buying. And that also coincided with the CNN data, which got all the way down to 6 out of 100. It just doesn't get any lower than that. So tremendous amount of pessimism. Everybody was leaning the wrong way. That has a lot to do with top line reporting, inflation, gas prices, war, all those things all contributed, conspired to create pessimism among institutions and individuals. And so, but we want to lean against that pessimism. And so the key is to look for ideas of accumulation, or where causes are forming. And this is why I really want to talk to you about what you're seeing in your incredible newsletter. And so an example is, look at this. This is the semiconductor index. Now, one of the things I like to do, John, in my COVID fog was I looked at all the S&P 500 stocks. I love to do this, but on a point and figure basis. This one box reversal method, it's traditional scaling. And John, what do you see there?
Well, we're certainly off the lows, and a little bit of cause built there over the past few months, back to the number 5 signifying May.
Beginning of May.
And yeah, then we've got a nice move, a little bit of lift there towards a higher value in this context. So very nice.
And so what I'll tend to do is I'll look for these kind of structures, and then that gives me a swing trading potential for a run up. And so that will be, and then I will, in this case, you can see, look at that downward stride there being broken. So if you can't catch the test here, the possible LPS, a test, try to catch the test or catch the break of the downward stride. That's kind of what I do. And isn't it amazing how simple Wyckoff is?
It's amazing.
Okay, let's clear up my mess here. And let me just show you one more. And that is, here is, for instance, advanced analog devices. And so there is, and this actually is one that I traded off of that SMH chart. And so here you can see a nice run up to the resistance, pulls back, tests it, and then it starts to go. So here's our count structure. So this could be a swing trading count here. And then this count would, if we can get through this resistance, could very well put this in place. So I'm wondering if the semiconductors aren't an opportunity here. And that also, when the semiconductors get going, that is oftentimes what gets the speculative interests going in the market on the upside, because they see these semiconductors starting to really trade well. So, all right, so enough of that. I just wanted to show you kind of one of the things that I really like to do to look at the market. And I look at all 500 S&P stocks doing that. But what we're going to do here is let's take a pause and give John the screen, and let's see some of the great ideas that John is looking at here, and be right back. Okay, well, John has an amazing newsletter, the Wyckoff Market Report, which is based largely on his scanning methodology, almost exclusively. Where me, I'm so like old school. I love to do the scanning, but I'll just sit there and just look at chart after chart. And I'll start with the point and figures, just the way I showed you today. And then if I see something really interesting, then I will build a count, because I have to have a demonstrable count that says that, hey, there's a swing trading opportunity here, whether it materializes or not. And then I will go look at the vertical chart and try to build the Wyckoff story around it. But here is a great see more, do less, see more concept, which is this great newsletter. And John, what do we have here?
Well, we have the newsletter itself. This is from June 3rd, our most recent issue. And as always, we start with the top-down approach. We have the indices. We use the index equivalent ETFs because they provide volume, whereas not all platforms support volume on some of the indices. And then we have the main spiders there. We also look at all of the industry groups that we track, 104 of them, and we're able to see performance over time. We sort based on 3 months because quarterly is more of an institutional time period for folks to think about when managing money.
And therein lies the concept of the end of the quarter being so important, which we just discussed a few minutes ago.
Yes, so that's going to be a big performance metric coming up at the end of the quarter. One of the unique features we have is the Wyckoff event summary. So we scan the market with algorithms that are designed to detect Wyckoff events, springs, upthrusts, breakouts, backups, breakdowns, and then we graph those so that we can see what's going on. We have a very interesting convergence of elements all towards the lower number end of things. And that's kind of perhaps an indication of some level of stabilization. Doesn't necessarily mean price is moving up, although it has moved up recently. We're just experiencing a tighter range of events. So very interesting. And keep in mind, analyzing the market in this method is a new thing. We really have to discover the meaning of this as we go along. Of course, we have our ideas and precepts, but one of the things we want to look at now is perhaps green shoots, things that maybe are turning around and going to give us hope for the future. What do you think there, Professor?
Well, I really believe we have a good shot at seeing a third quarter rally of some sort. And of course, anytime we spent retesting the lows or making attempts to test between now or the end of the quarter and where we are back to May, all builds bigger cause. So we're looking for the characteristics of cause, and we're going to show you a few examples of stocks that are already leading in that capacity. Those are the ones that we're really interested in. So green shoots is a favorite topic right now.
So in the world of Wyckoff, green shoots typically associated with springy events. Springs are really a form of interaction with support. Stock will move down through support and back up into the structure, or maybe not make it quite to support and move back up, and that would be an LPS. So here we have things that are interacting with support that have positive momentum after that interaction. That's the springy character. So some of the areas of interest we have looking on the sectors: discretionary, number of retailers, specialty retailers. We're going to take a couple of looks at some charts there. And we also have industrial, commercial vehicles, again, kind of interwoven with that discretionary theme, because a lot of commercial vehicles are moving consumer goods and they're feeding that discretionary element.
And John, that's so counterintuitive. You know, discretionary, you know, high gas prices, high food prices. Discretionary means that consumers can be discreet, can be discretionary, and avoid those items until they have a better budgetary economic conditions personally. And so the fact that this group is coming to the surface and looking better, I think is so fascinating and very counterintuitive.
Yes, and discretionary was not the place to be for the last couple of quarters. Very, very beaten down sector. But some of the green shoots are starting to come back, and there are some rumblings that maybe things aren't as bad as they seem, although I filled up the car today and I'm
Feeling
I'm,
bad. You're
I'm in
feeling
the
bad.
camp that says they're as bad as they seem. But
It's
here
one of
we
those
have,
deals where you go to Costco to get gas because then you can go get a Costco hot dog.
yeah, small consolation.
Yeah, right.
The the chart we have up here is the PNF, and it's the PACCAR commercial vehicles stock. And this stock is on the list of springy events, and it's near the top of the list. And one of the unique features of the list that we provide are that they sort based on the strength of the events. So in this case, how far has it come back in? The ones that are at the top of the list have moved up and into the structure, sometimes even through the structure on a real momentum rally, but the ones at the end of the list are closer to support. So if you want to fish a little deeper, go to the other end of the list. We'll take a look at one from further down the list in a minute, different area, but here's what we have with PACCAR. What do you see here, Professor?
Well, this is pretty cool because in fact, when I go through my S&P 500 stocks point and figure basis, one of the stocks that really came to the surface for me was PACCAR. And I looked at that and I said, look at that big cause. That's a potential swing trading opportunity. And so I am in a swing trade in PACCAR at the moment. And you can see the downward stride and the breaking of that stride in this catapult wall that we got. And now it's consolidating in a tight, quiet range, which we wanted to keep doing before it starts to go up again. But we have now a way to be able to measure the potential for how much the stock might be able to go up, both near term and maybe a little longer term. And so whether or not you're using the scanning tool here, or in my case, I just like to get eyeballs on these charts. Either way, the scanning engine picked it up. And this is, I think, a very interesting structure, and I'm looking for as many of these as I can possibly find. And there are quite a few in the S&P 500 right now.
Well, there's quite a few in this week's report. So take a look at what that looks like on a bar chart, and we see a very, very clear springy event here with a rally, best rally we've seen in quite a while, and we're getting this slightly up tilting backup area from this small structure here. So that's what we found, and we see that OBV is turning up. This type of cross on the OBV can be very, very important, and relative strength up, scooter up. Still early here, but there's a lot to like on this chart, I think. What do you think, Professor?
Well, I'm in it. It's working so far. And the one thing I would say here is that as important as the vertical chart is, and as much information is on that chart, which is all important, notice how the point and figure chart was able to strip the noise out and show the essence of a causal structure, which made it very compelling. So that's one of the things I love about point and figure work, especially the one box method. So anyway, let's see some more. Let's look at some more.
So here's another very prominent triple top breakout in conventional PNF talk. Here's OLLI's bargain outlet. This is right in the discretionary, heart of discretionary. And look at what it's doing. So it's even overcoming a prior high with that move of late. And that's all June. For the folks at home who don't routinely look at PNF charts, the number 6 there is a designation of the month. So that gives us a clue as to the time period that we're looking at, but all June. What do you think there, Professor?
Well, beautiful cause, built, had a nice higher low backup, which is an LPS kind of an action, last point of support. Beautiful catapult wall jump up and out of the prior high, so may consolidate this area. But now this whole area could be all the way back, could be a larger accumulation. And also note that this little area right here on the left side of the chart that looks like accumulation, look at how it resolved itself into this beautiful swing trading move up to $55. And it came out of this hinge at around $44, $46 and then ran up. So there's a swing trading opportunity. Now I noticed down here that you have FedEx, which is about 3/4 of the way down. And that's one that came up in my work also. Go up a little bit. Yeah, right there.
Yeah. So one of the nice things is when you click on a chart, it will come up in your browser. So very handy. Look at
And
the just starting to get our OBV cross there, still down on the moving averages, but just making a new cross to the upside on the relative strength. What are your thoughts?
my thoughts are we're out of time, but make a point and figure chart of this and study it and see what you think, everybody. And thank you, John. Thanks for being here, and we'll see you all next week.
Thanks, Professor.